Hello and welcome to another episode of CryptoTime. My name's James Coughlin. I'm one of the portfolio managers at Bitstocks. And I'm joined today with my colleague, Stephen. How you doing, mate?
Very well, mate. How are you?
Yeah, very good. So just to reiterate the format of this show, what we do is we kind of look into what's exactly happening in terms of the movers and shakers in the market, what's happening news related, and we'll just tip into what's relevant and what's happening at this moment in time. So as it stands, we're going to be running into merchant adoption, and also we're going to be looking at trading volumes as two of the subjects. One thing I must say before we start, as always, please do not misconstrue this as investment advice. This is really for you to go away and do your own due diligence before getting involved in any investment. So yeah, let's kick off.
Let's do it.
Right, so as we mentioned, merchant adoption. Place I always like to start is let's cover some of the negatives. So let's talk about the limitations of merchant adoption first. Have you got any points you want to kick off with?
Yeah, sure. So I think some of the limitations are definitely due to the infancy of the space. We're seeing all-time lows in trading volumes, especially from summer 2017, and that is quite concerning for the very short run for merchants. If volumes are low and merchants are accepting cryptos via payment, they have to then liquidate those if they don't wish to hold on to the asset. So liquidating that would be through ask rates on exchange. And if the purchasing power isn't there, you could end up with massive spreads that will then be inflicted on the actual consumer. So, premiums could increase quite substantially. And then you've sort of got to ask yourself, is it worthwhile in the short term to actually pay with your cryptos?
Yeah, I hear what you're saying, and I think that is a major point. I mean, at the end of the day, what we need to start seeing within the space is people actually spending cryptos. But I think the question that's always going to arise is, look, if this is a market that we believe, and I think a lot of people believe the same sort of way, is that the market's really going to take an uptake, and that's going to be a fiat kind of plus to anybody that is involved, you're really going to kind of take a hesitancy around it because you don't really want to turn around and be that guy. Everyone knows the famous story about the pizza. He turned around and bought, I think it was 10,000 Bitcoins that he spent to buy one pizza or two pizzas. And no one wants to be that guy. No one wants to be the guy that spent it when it was too early before it really reached its full potential. But like I said, it's a double-edged sword because we need people to actually start using the network to give it true value. That's personally how I feel about it.
Yeah, I think that's a fair point. I also think that another sort of limitation which can be seen in a very positive light is due to the current solutions, current merchant solutions. So the current solutions aren't very nimble. They're not user-friendly, in my opinion. We basically need more innovators developing merchant solutions that my grandma and my younger brother can use to be sort of available for everyone. And I mentioned that was actually a positive because it actually forces innovation. And as we know, innovation within the space leads to higher competitiveness and better products, which give greater user experience.
Yeah, competition breeds excellence, I think is a good way of putting that. The other thing to it as well is that when we kind of look at the incentive kind of side of it is where I find it quite interesting. Look, if I'm a merchant and I'm sitting out there and I'm not, self-invested in crypto or my company's not invested in crypto, where's my incentive to start accepting it, right? Where is the benefit? So, for example, there's a company called Purse.io. Purse.io are selling a lot of Amazon goods at discount using cryptocurrencies. And this is done in some sort of clever way using Amazon gift cards, right? But when you kind of run through the model and how they're kind of working it, it's hard to see how a lot of people can benefit on the merchant side. Yeah, I think that there's certain sectors that really make sense with this, like things like gambling, where there's high fees, that are being charged by banks to these actual corporations themselves. When you're actually talking about just the standard merchant and you're going in to buy something very cheap, it becomes difficult to see how that actual positive comes through without the incentives being there.
Yeah, of course. I think the incentives are quite heavily skewed towards the customers. So quite a few of them, like you mentioned, offer heavily subsidized goods. So in my eyes, a cheaper good, yeah, for sure. I'll definitely use my cryptos. Not so much on the merchants, but what I will say is that I do think there is great scope for merchants. I think it allows merchants to open up an arena of people which would otherwise be inaccessible to. So for example, if you have an individual who isn't fiat rich, so to speak, but has quite substantial crypto holdings, you're in essence increasing that merchant sort of market by adding him the ability to actually pay using his cryptos. So there definitely is reasons why people will use cryptos to actually pay for their goods. And there's definitely reasons why merchants might subsidize it if it means making a greater number of sales per year. Simply to do with their profit margins, it could be more profitable for them.
Yeah, I think it's really prudent as well to mention at this point that, the whole point of a blockchain is it is an immutable ledger. It is stamped into it. There's nothing that's going to change. And that ledger can be checked by anyone. It's public, right? And people thinking, like, for example, that they've got some sort of tax advantage, right, by using cryptocurrency is totally false, right? So I think that some people get confused as to exactly how they can benefit from it. One thing that I think is very real and very kind of understandable is if merchant turned around and said, look, we're incentivizing you to use crypto because we're going to give you a 10% discount on the actual item itself. That incentivized me to turn around and actually use crypto to buy it, because I can then, instead of using my fiat, top up fiat using my cryptos, get my 10% discount on what I'm looking to purchase. That makes sense. But where's the incentive on the merchant side? Where do they benefit from this? I think that's the question I keep asking myself, right? And there are some, but I think that is where we need to see this space grow and improve to actually really get everybody on board with this. Why does Amazon need to? Why does, for example, British Airways need to start accepting, for example, crypto to purchase a flight? These are the things that we need to start seeing now within the space.
Yeah, that's actually a great point. And you've just triggered me on another point off the back of that. It could actually increase the efficiency and claims from merchants. So, for example, if I go to a store, I could claim I've lost my receipt, but I paid with cash. Now, I could actually purchase a counterfeit good and try to redeem it at a store. Whereas if you're actually using the blockchain, you can actually see that the person has genuinely purchased that item from the store via looking at wallet addresses and transactions. So I think that is definitely a good USP.
Yeah, 100%, 100%. So I think that kind of covers the limitation side of things. I think that now it's a good idea to touch on the positives. When we're looking at the positives, we can glean certain things around backed exchange. Now, I know you were talking to me prior to this podcast kicking off around this. Do you want to kind of throw into a little bit of that stuff?
Yeah, sure. So what I found super interesting about Backed is that they're actually, really rooting for the merchant. So as everyone's aware, Microsoft and Starbucks were early investors in Backed, but one thing not a lot of people realize is that the investment was a conditional investment. It was conditional on Microsoft and Starbucks actually accepting Bitcoin alongside other few cryptocurrencies as means of payment within their stores. Now, if you actually look at that, that is good. It's good for Backed because they would have to, the agreement was that they'd have to use that through Backed, i.e. Liquidating, etc., which has a monetary incentive for Backed. But it's also good because of the trickle-down effect. If you have big merchants expanding and actually accepting a lot more currencies, so to speak, i.e. cryptos, it normally causes this trickle-down effect. And that is basically like a domino effect where other businesses and other merchants will actually follow suit. So that was actually really interesting.
Yeah. So in terms of looking at the kind of Microsoft side of things, I know that Microsoft kind of dipped their toe previously before. And feel free to correct me if I'm wrong, but I believe it was around kind of opening up, Microsoft accounts and things like that. It was nothing kind of too serious, right? Do you see this as being a massive step forward in relation to that?
I do, yeah, because when you actually speak of Microsoft dipping their toe in the water, I understand it was for only a marginalized amount of goods that they offer, services, something like, it would be for like one package. But I think this is more of a bold statement claim that I think my understanding from this is you can use your cryptos to actually purchase anything you want from Starbucks and Microsoft. And simply having that is a lot more impactful rather than saying you can only purchase goods X, Y, and Z using your cryptos.
Yeah, no, totally agree with your point there. I think now we'll just move it on a little bit. Let's talk about trading volumes. So first little point I've got down on here is how large institutions gain access to the market. So something I've been looking into at great depth is this exact point. If there's a large institution that's sitting there at the moment and they want to throw, say, 20, 30 million into cryptocurrencies, how do they best go about doing that, right? Because if we look at the daily volumes at the moment, take a pairing that is quite low in liquidity, let's say USDC, for example, paired against, say, BSV. Liquidity is extremely low. So if, for example, one of these large institutions wanted to, say, purchase into or exit out of one of these coins, the likelihood is that they're going to end up paying a huge premium to get involved. Now, that's going to be on both sides. That's going to be on the actual entry and that's going to be on the exit. Therefore, they need to gain substantial amount of growth within the asset to actually break even on that. So when we're talking about risk to reward ratios and we're talking about institutions that are known for being secure and safe with their funds, this isn't something that really fits the bill for them at this moment in time, in my opinion. Now, I don't think that this is not going to change. I think things are going to happen around this kind of space, but I just wanted to also get your thoughts on it.
Yeah, I totally agree. And it goes back to the conversation we had a few days ago, really to do with why people use the dollar. They use it because they have belief that they can accept it and use it in another shop. Now, that's because of security. It's been made legal tender by the authorities. If we have institutions like Goldman, like Backed, like the ICE exchange actually coming into the space, it brings that element of trust, that seal of approval, if you like. So people then have the confidence to use it because, the finance conglomerates or the finance, champions of the world are actually welcoming it and promoting its use. There's also custody solutions these people are rolling out. And like Fidelity, for example, releasing their trading platform, all of this gives users confidence they can further use it. I think what this is going to do, it's going to bring a lot more volume to the space over the long run. Over the short run, there's black swan events that happen, and the short run's way too unpredictable to actually guess what will happen. But over the long run, I definitely see there being stable growth within volumes, and that is really what is going to entice the big institutions you speak of, because they want smaller volatility, which means they can get in at a sort of tighter spread, if you like.
Yeah, and I think that companies such as, your Backed, Fidelity, these kind of people that are coming into the space, and they're coming into the space with a serious stamp, making some very, very bold claims, which I personally think are very achievable for them, such as having a robust custody service, allowing, a regulated entity to give, access to the market for a lot of different people out there, whether that be institutions or individuals. Yeah. This is the way that we need to see it go. And like you said, previously when we were talking on the merchant side of things, they're working with the space, such as, Starbucks and, Microsoft itself, to turn around and say, look, we're going to use this advantage that we've got as being one of the stable, secure exchanges that are going to be out there, and let's get other people involved, and let's make sure that we do it in the correct light. And, getting these big names, as you said earlier, such as Starbucks and Microsoft, is exactly what we need to start hearing, because then you'll start seeing that trickle effect down the board where you start seeing more and more people adopt it. But I think that we have had these limitations in place previously, and we need to ensure that going forward, they get ironed out the space. And I think it comes back to things that I've said on previous podcasts. This space is in its infancy. Yeah. People don't want to invest in something that's, at the top where it's got every single part of it complete, or there isn't really much of an investment to make money on. Where you make money is the fact that we are in our infancy. There is still a lot of things within the cryptocurrency sphere that need to be worked out. Do I believe they're going to be? Without a doubt. Without a doubt, that is going to happen, but it's going to take time. And I think that if people have the patience to go through this stuff with the volumes and the actual, limitations we're experiencing within the crypto sector as it stands at the moment, these things are going to get worked out and they're going to get improved. And, it's been such an exciting space to be in over the last couple of years or so, just to see how it's changed so much over that period, let alone what it's going to do over the next 5 years. And I think it's going to be an exciting space, that's for sure.
Yeah, it's definitely exciting times ahead. One thing that actually came up within our morning news meeting this morning with the team was I can't remember the company's name, but they've actually enabled you to trade your Bitcoin for like Facebook shares or Google shares by actually digitalizing them. Now, how it would happen if you actually have Facebook shares, you would send them to the company's prime broker. They're fully EU regulated in Estonia, by the way. And you would simply send your shares to the prime broker. They will lock them up and then release Facebook or Google digitalized shares. And that is on an exchange directly with Bitcoin. So what you actually can see is volumes actually from traditional equity markets seep in. We need more of these innovations. The only thing sort of holding Bitcoin back and the other cryptos is the definition of what asset class they belong to. And I do think that's a problem that will get ironed out, within 2019, maybe seeping into early 2020. And once that sort of comes of clarity, it will be very, very good for the space.
Yeah, and I think that's a perfect spot to wrap this up. Thank you so much for obviously coming on board with me and doing
Pleasure.
This today. One thing, as always, hit that notification button so whenever there's something new coming from Bitstocks through YouTube, you've got an opportunity to watch. And also, please listen through Spotify and iTunes if that's your preferred source. So yeah, thank you so much.
Yeah. If you guys are interested to learn a little bit more about what we do here at Bitstocks, as well as some of the extra community initiatives we're involved in, feel free to revert back to our website. Thanks a lot for watching and goodbye.